What's going on, guys? This is your boy Trillionaire Mac. Welcome back to another video. So in this video we're going to be discussing order blocks, which are points of interest. Okay, so we're going to be discussing what is a valid order block, what is an invalid order block, basically the confluences that I use to figure out and find valid order blocks to trade from. Alright, in this video I am not going to go over my high probability order blocks. Alright, but I promise you guys, if you guys apply this information to the charts, if you guys backtest this, the order blocks that you find, you will be able to trade from, and we are going to prove that today on GBP USD. So I don't really trade GBP USD. Most of you guys know I've been focused on Euro USD for the past maybe 4 or 5 weeks now, getting the course ready and everything, the liquidity course ready. So I haven't really been trading other pairs, but on GBP USD we can go over this pair and look for these valid order blocks. So I'm going to be on a time frame that I'm not usually on, which is the H1 time frame. All right, I'm usually on the H4 M15 looking for my points of interest, but we can definitely use this time frame to figure everything out. So what are order blocks, or you'll also see me call them points of interest? Order blocks or points of interest are just supply or demand zones responsible for breaking structure and creating a liquidity void, which is just inefficient pricing. All right. You also would like the added benefit of having inducement, okay, above the demand zone or below the supply zone. All right. If you don't see inducement, that's fine, but inducement is always best. Now, if you don't know what inducement is, feel free to go check out that video I released like maybe 2 or 3 weeks ago on Liquidity Concepts. Go over inducement. So let's start to look for areas or points of interest that are supply or demand zones and break structure and create liquidity voids. So if we just start over here, the left of our chart, we can clearly see this area here. Now, when I'm asking for a break of structure, right, it's up to you, okay, I want you to back test it, but you can either break minor structure or you can break major swing structure. So it's completely up to you, but I definitely want you guys to go back test it to figure it out. Now, do you need to see inefficient pricing? You don't absolutely need to see inefficient pricing, but it is added confluence for sure. All right. Now within the course, there are a couple of videos where I go over specific order blocks, okay, points of interest that I use in order to form a high probability trade off of. All right, they're not regular order blocks. I'm not really sure what retail traders call it. I haven't even come up with a name for it yet, but there are certain points of interest that price has a high probability of reacting to, and that's pretty much the only points of interest that I trade from, which is taught within the liquidity course, which is dropping within the next 7 to 10 business days. All right, super excited about that. But yeah, so when that course drops, okay, I will be going over an order block 2.0. Okay, that is a very, very high probability, and it's pretty much the only one that I use. It's also within my trading plan, so those of you who do purchase the course, you guys will see that you guys will see my trading plan and everything, and you guys will be able to formulate your trades just like me. Let's put this up here. All right, so here we have a minor break of structure. We do create inefficient pricing. Price does have like this is a little inefficient here, but basically what I'm looking at is the fact that on the H1 time frame we just have bullish candles. We don't have any bearish candles throughout this area. So you can look at wicks, okay, or you can look at the overall time frame, and I'm just going to look at the overall time frame. So I'm going to count this as still inefficient because buyers are winning all throughout this area. All right, now this really doesn't tap in, okay, as deep as I would like, so I'm just going to count this as inducement here. Okay, so do we break structure? Check. Do we create inefficient pricing? Check. We just have buyers all throughout this area. Do we also have inducement? Check here. All right. What does price do later? So price plays around, plays around, plays around, eventually comes back in here, and then pushes to the upside to take out these highs. Perfect example. Now, even if you're looking for possible counter trend opportunities, you can still use this concept. All right, it is still very, very valid. I would not suggest using this for counter trend, but you absolutely can. So here we have supply. Let's do refined so it can match. Here we have inducement. You guys are going to see this over and over and over again. And like I said, I use a different type of order block now, or a different type of supply and demand zone now whenever I trade, all right, which I do teach within my liquidity course. But you can still be extremely successful using institutional order blocks, or how retail traders look at institutional order blocks. So we have a minor break of structure here. So it's minor because it's internal. It's not external or anything. So we have a minor break of structure here. Okay, do we have inefficient pricing? Check. I would count this as inefficient, right? A little bit of inefficiency still up here as well. Do we have inducement? Check. Here. What does price do? Trades right back up into this area, and then we roll over to the downside. Right? Perfect, perfect, perfect. Let's look for more examples. Okay. Okay, here. Now, the structure that we break is very, very small. It is very minor. Minor structure here. Can use this as inducement. I would rather it be a little closer. Do we create inefficient pricing? Check. What does price do? We trade into this area and then we run. Now, I'm not setting limits on the H1 time frame, right? I hope you guys know that. Like, I'm not setting limits and just hoping price reacts and goes, right? That's not how I take my entries. How I take my entries is going to be based on the theory of the lower time frame, okay, and how fractal price is by nature, since price is moved by an algorithm that seeks liquidity. And because we understand that, right, I have a three-step, well, I'll call it maybe two-step, but you have three opportunities. You have your risk, you have your primary, and then you have your confluence. Entries, I'm not going to teach that, all right? That's going to be taught within the course. Okay, we will do an overview video on that topic. But these are points of interest that I'm looking for certain things to take place on the lower time frame. So I actually don't have to be on the charts all day, right? When price pulls into this area, then I pull up the lower time frame and I see, you know, what's going on to see if I can take an entry, all right? Which I bet you an entry was right here. Now, should I prove this? Should I prove this? I might prove it. Let's prove it. Okay, so let's talk about entries really quickly. Drop some gems on you guys. A little bit of, you know, a little bit of information for you to use. Okay, so within this entire area here, we can see that we have some type of break of structure. I would say here, this would be a minor break. Now, on the M1 time frame, I could see this a lot better than on this time frame here, but it's okay. Right? So we have a break of structure here. Now, where's the apex of this break of structure here? Right? You have this area here, okay, as a point of interest. But more importantly, this area here looks like it's responsible for taking out this failed reaction. Okay, why is it a failed reaction? We react to this demand here, right? But price does not seem to respect this demand overall, so it's a failed reaction. I go in depth on what failed reactions are and supply and demand concepts on the course. In the course, by the way, we're going to have supply and demand concepts, we're going to have liquidity concepts, and we're going to have market structure concepts. We're going to tie everything together along with a little bit of other things that I'm not going to speak on just yet. But it's an extremely long course, chock full of information. There's at least 22 videos, and it's an interactive course. So I'll be uploading videos, as time goes on to update my process, to update you guys on things I'm doing slightly different, things like that. So we can see the apex of this failed reaction here, price taking out this failed reaction here, takes place at this point. All right. Do we create an imbalance? Absolutely, right? We have a little bit of imbalance here within the market, and we definitely have imbalance here. All right. Do we have inducement? Absolutely. We have inducement here. We can put an X, right? So we have inducement all throughout this area here. All right, let's go to the M15 really quickly, just to see if we're missing anything on the overall higher time frame. All right, so this is everything that we're seeing on the lower time frame here. All right, we've already mitigated this here with this push to the downside, pushing back into it. And for the most part, I'd say we've mitigated this as well. Now this is really looking at the fractal time frame, or the fractal nature of the time frames. All right, you don't have to go into this much depth when it comes to something like this, as well as you don't necessarily have to take your entries like this either, right? I wouldn't take this entry mainly because it's counter trend, but this wouldn't be something I would be interested in. But just to break down the concept to you guys and show you guys that you can use this on any and every time frame, I'm going to go through this very quickly. Now, I would be on the 1 minute time frame getting, the specific details of this area. I don't want to go to the 1 minute because we are all the way back in May, okay, and it's going to just reset my chart, and I really don't feel like dealing with that. All right, and then your entry would be short position here. Now, this is a 5 pip stop loss on the 1 minute. All right, we would be able to get a little tighter, and really, since it's a 5 pip stop loss, I would probably just 5.2 pips. Nah, I'd probably leave it, excuse me. And then, of course, you want to target some lows that you see. All right, so this would have been a 90% trade. Very, very easy, and it took place during London session on May 28th. All right. Now, like I said, I don't really trade GU like that. All right, my main focus is EU, but I just wanted to go over that quick little entry and show you guys that this takes place very, very often. These are the only 3 confluences you need for regular order block. Make sure it's a supply and demand zone that's responsible for breakup structure, creating liquidity void or inefficient pricing, and also leaves behind inducement. If you guys trade order blocks that simply just have these rules, you're going to win 66.6% of your trade, so we can round up to 67. All right, as well as with proper risk management, one of your wins should take out 3 of your losses minimum. All right, minimum. Okay, so with that being said, I'm going to go ahead and wrap this video up here. Just wanted to drop this on you guys. I've had a lot of questions about this, but once you guys actually put your hands on the course, you'll see a lot more gems around order blocks. Right? I don't really take regular retail institutional order blocks. Right? I actually take advantage of institutional order blocks. Right? But I'll break that down within the course summary video. Now, with that being said, I'll catch you guys on the next video. If you enjoyed this video, please subscribe to the YouTube channel. All right, leave a thumbs up on the video if you found it useful, if you can apply it to the charts. If you do apply it to the charts and you see that it works, come back in the comment section and let me know. If not, all right, if you're not able to see it, let me know as well, and I'll try to break it down a little more and provide you guys a little bit more information before the course is released. With that being said, I'll catch you guys on the next one. If you're someone that is struggling, sign up for my mentorship program, sign up for one-on-one sessions with me, tap in with me, let's get it. I'm looking forward to it. All right. If you guys want access to my trade breakdowns, click the first link in the description for the Telegram channel. I'm going to switch things up slightly. So instead of trying to focus on signals, I'm going to be focusing on creating the trade plan for you guys, letting you guys know what points of interest I am looking at, okay, because that's the most important thing. You guys won't see any regular order blocks or anything like that. You'll see certain order blocks that I use, and they're all high probability. Yesterday we sent out one, a little breakdown video going over a point of interest, and we did see price react to it. Absolutely perfect. And that is what I'm going to be focusing in on. All right, and I will also give everyone that's a part of the Telegram channel, you guys will also receive a generic entry method that you can use to take advantage of my points of interest and things like that. All right. With that being said, I'll catch you guys on the next video. Subscribe to the YouTube channel, hit that bell notification icon to be updated whenever I upload a new video, and leave a like. Love you guys. Peace.